Welcome to IMG Insights, our video series where we break down key topics in multifamily real estate investing. At IMG, we sponsor real estate investments and we provide advisory services to real estate owners. One of the company's advisory services is risk management. So in both of these functions, as an investment sponsor and an advisor, we emphasize the importance of understanding the rewards and the risks that come with apartment ownership. Today, we're focusing on the risk side of the equation, specifically how we manage that risk through insurance and by being proactive owners. I'm Dave Mikkelsen, IMG's Director of Investor Relations, and joining me today is Brandon Felus, IMG's Risk and Compliance Manager. So Brandon, thanks for being here. You've been the company's in-house insurance expert for a number of years, and we appreciate you sharing your expertise. Insurance seems like one of those subjects where most people don't get into the details for the fun of it, but you always do a good job of bringing the concepts to life and explaining what's going on.
It's definitely on my list of favorite things and about as exciting as preparing taxes or watching paint dry. But I like to think about it like the spare tire on a car. You don't want to spend money on it. Most of the time you forget it's there, but when you get a flat tire, you're sure glad that you have it. So thanks for having me, Dave. I'm happy to be here.
Great. Well, that's a good way to put it. You're glad that it's there when you need it. So we'll start by talking about some of the background across the industry. It seems like apartment owners have felt increased expenses in the past several years in all categories, but insurance has been the fastest rising cost category. What's driving that sharp increase?
That's a great question. Insurance used to be something that was a minor part of owning apartments, but over the past 5 years, we've seen insurance costs rise to the point where they can make or break a deal. The sharp increase is due to a number of factors. Now, I'm going to speak primarily to property insurance since it's about 80% of the total insurance cost. The first driver is being catastrophic events and insurance losses. From 2020 to early 2025, insurance carriers had record losses due to events such as Hurricane Ian in 2022, Hurricanes Helen and Milton in 2024, and the California wildfires in early 2025. These record losses experienced by insurance companies caused their reinsurance to go up significantly. And not only that, but the cost of reconstruction has gone up. From materials to labor to permits, the cost to restore a building has gone up significantly over the past couple of years. So insurance carriers are not only trying to offset their own losses from catastrophic events, but also the increased cost of their reinsurance and reconstruction. And they do that by raising rates and passing those costs on the policyholders.
Brandon, that makes sense about the insurance costs. When we look at the history of insurance pricing, and especially the last few years, we've been through a lot of increases. You just went through a major review process earlier this year to find more competitive insurance solutions for the portfolio. Can you walk us through the steps that you took and what that search looked like behind the scenes?
Absolutely. We're always looking for ways to keep insurance costs down while remaining fully covered. And we do this by working with multiple insurance agents and companies across the country so we can get as much feedback as possible on rates, trends, programs, whatever it may be. And this is very important in today's insurance environment as carriers are placing sublimits on certain coverages or just removing them completely. So for example, insurance agent A might not have the greatest property coverage, but have a great casualty program. And with insurance agent B, it might be reversed. So a lot of times it's about exploring all of the options and piecing them together where it makes sense. This year, we achieved tremendous savings by utilizing a master property program that includes all of our locations. Now, in recent years, this didn't make sense because we operated in volatile insurance markets such as Florida. Now, I love Florida, don't get me wrong, but I don't love its insurance rates, and it's a great example for this discussion. A property located somewhere like Florida can be detrimental to a master insurance program that is not of significant size or significant scale because there's just nowhere to spread the risk. So all the locations on the schedule will see rate increases. Some owners might be okay with this, But if we're going to use a master program, it has to benefit every location in some way, which we were able to achieve this year.
That's a huge success. And it sounds like those relationships, the negotiations, and the groundwork that you laid really paid off in a meaningful way. What do those improved insurance results mean for the properties across IMG's managed portfolio?
Overall, it means more money to the properties. And with these extra funds, we can complete upgrades and mitigate risks to help prevent future losses and further reduce rates. For example, a lot of buildings built prior to 2000 don't have sprinkler systems. With the extra insurance savings, we can install additional fire safety measures, such as more fire extinguishers or stovetop fire stops. One of our locations in Georgia does not have fire sprinklers and is located in a heavily wooded area. So we took steps to proactively reduce the risk and applied fire retardant paint to all the buildings to reduce the risk of fire. Insurance loves seeing these proactive measures, and they directly impact and reduce rates. They also make the place a lot safer for residents and protects the assets for owners as well as investors. We've gotten insurance down to the point where it's become a part of the deal again and not the thing that makes or breaks it.
Brandon, when you say that the new insurance policy saves money for the owners, that's probably the most interesting thing and where the ears really prick up. Just looking at what you accomplished in 2025 for the next year's insurance policies, looking across that 16 property portfolio, it was $100 per unit savings on average for the year. That total savings was $360,000 across the properties. And when you look at that in terms of property value, which is a great kind of big picture way to benchmark that savings, $360,000 at a 6 cap translates to $6 million in value that goes back to the properties. So that's a really significant number. Not only do you save money on your operating expenses in that year, but you're building value longer term for the portfolio. So looking ahead, wins for owners will come in many forms. You're always looking for opportunities to grow income and reduce expenses. Tell me about the future and what you're doing to continue some of the successes that you're seeing right now.
Looking ahead, we're going to keep doing what we've always done. We found a program that we like, but that doesn't mean we're going to stop looking for something to improve it. Insurance is constantly changing, and there are new and emerging programs almost every day that we will explore, as well as revisit the ones that worked for us in the past. Our primary focus during the policy period is risk assessments and mitigation to help minimize losses. Reducing the number and value of claims is another key to keeping insurance rates down and securing better rates for the following policy period.
Brandon, thank you for sharing your insight and your experience today, the context on the current insurance environment, and also how you highlighted how IMG is working to protect owners through the coverage and through disciplined cost management really is helpful and gives us some more understanding of how this process works. We appreciate your continued advocacy for our investors and how that impacts the bottom line. This will conclude today's episode, but you can find more IMG Insights on demand at our website, where we explore topics designed to educate and empower multifamily real estate owners.